Okay, what's up, chat? How are you doing, YouTube? How are you doing? It is Tuesday and we have some news right now as well. So let's see what price is gonna give us, as we may expect a little bit of volatility. So it is currently 2:30 p.m. Central European time. We have PPI, MOM stuff going on over here, and at 4 p.m. we have Powell speaking apparently. So it might increase the volatility on the chart, which is of course very interesting. So a good moment to go live, as immediately we have some price action on the chart as well. So how are you doing, everyone? Good to have you here. And Jeroen, thanks for the gift. Really appreciate it. Thanks for supporting the community as well. Amir, send me an email, koenztrading@outlook.com, and I will get you sorted. Make sure to send me your YouTube, Discord, and Telegram username. And thank Jeroen. Also, Jeroen, of course, I know the website, right? The texts, they have to be written. They have to come as well. So I definitely I'm under a little bit of pressure to write these texts. So make sure that things are gonna run smooth also for your project. So I'm just, they're in my agenda, by the way. They're in my agenda. So, Sarega, Particles of Time, good to have you here. Always a pleasure, Particles of Time. The Efteling yesterday was really good. It was a great day, beautiful weather. We had a lot of fun. And when we came home late, by the way, I was finished. So I just wanted to go to bed. Crypto Aman, how are you doing? Legionario, welcome. Lalith, ready, good to have you here. Point of control tapped. Not yet. Almost here. So in this live stream, of course, we're going to cover Elliott Waves. Mark, how are you doing? Welcome. Isaac, good to have you here. Casper, welcome. Fozzy, welcome. Yuan, how you doing, man? It's been a while indeed, but here you are once again. Good to have you all joining. So volatility on the chart, great time to be live. Let's observe for a little bit what's happening with regards to price. Then we're going to jump into Elliott Waves, right? We're going to do some Elliott Wave analysis across the different time frames. I want to start on the daily and then zoom into what we are looking for locally, together with the, or in confluence with the support and resistance areas that are interesting to keep an eye on. And yeah. Then we go into chatting and Q&A. Now for the giveaway winners, the 10K giveaway winners, we're already at 11K. It goes very quick, but the caps are coming this week, at least according to plan. The embroidered Koens caps should arrive this week, and I've already started packing the hoodies and the t-shirts. So let me quickly show you. So the hoodies and the t-shirts are being packed pretty much as we speak, right? Outside of the live stream, beautiful wrapping paper. I mean, I like blue, which is my favorite color. So got some shiny paper for you, and this will of course be sent across the world. So it's almost like I'm running a web shop, man. Like I have no experience with this, so it takes a while to get the addresses, get the labels printed, but it looks good. Looks good. So. Yeah, that's coming. It's coming. It's on its way. Every day I make a little bit of progress with regards to these the giveaways. Glock 3, how are you doing? Have you ever owned it since I joined? No. But generally during the live stream, I can sometimes trade during a live stream, but I'll never show it on the screen. So I don't influence the viewers, Alan, how are you doing? Alan, welcome. And Casper, always a pleasure. Good to have you here. Vitalian, Mr. Goku, how you doing? Welcome. Stefano, welcome as well. So, yeah, we got some great volatility on the chart. A bit of volume, like a bit of a volume increasement as well. Now, I have to say, I have no idea what happened on Coinbase, but this here is really ugly. I have no idea what happened. But that is, of course, not what we like to see. If we go to the index chart, it looks a lot better, right? Price moving to the downside. We have some volume increasement as well, without all of the long wicks. So this looks better, right? Volume moving down as volume is increasing. But on Coinbase, yo, mate, like this is not great price action. Anyway. Yeah, let's see what price is going to give us, and start the Elliott Wave analysis for all of you. I see a question as well. Giga high. Yeah, I don't really know what it means. I don't really follow the news as in the fundamentals, what it means, what it might do with price. But I just know, hey, it might increase volatility, which is interesting. So guten Tag, by the way, Hodl Crypto. Where can I learn about FIB time? That is the one element in Elliott Waves that I do not have a public source of. It's very difficult to find any info about Fibonacci time and time in general. It is something that you will learn as you increase your knowledge about Elliott Waves. You start to get a good idea of the relationship between the waves. But in the gold membership, that is where I made a full video about FIB time per scenario. So every scenario fully according to FIB time as well. And I'm currently working on updating every individual or making short to-the-point videos in gold about every pattern, which includes FIB time as well. So because it's a topic that I use FIB time all the time. It's just I have learned it by implementing and all the Elliott Wave knowledge, right? Reading all the sources, and then that's when you get a good idea and a good grasp of FIB time. So yeah, I've been using it since the start, pretty much. on the drop. Let's see. Good luck, Casper. Bones, welcome. Welcome, welcome. Eric, we're going to cover Elliott Wave. You survived the magical world at the Efteling? Yeah, it was amazing. I really enjoyed the Efteling. We had a great time. And went to all the rides that we wanted to go to. Weather was great as well. And yeah, I mean, it was a great time in the theme park. Dump happened as you predicted. Well, we predicted volatility. I mean, honestly, if we look at this move down, then yes, pretty much. This was according to plan. What's up, MT? How you doing? Learn Fib Rings. That's a good one as well. Fib Rings. Liquid Mafia is a boss when it comes to the Fibonacci rings. So very, very much recommended. Yeah. With regards to the price action here, I'm not sure when I showed my like a little bit of the trading plan that I had. So 56k here, long lows. Then we had a short at around 65. Then we had, I kind of forgot if I had anything here, but we had a long here yesterday, a short here, which is now at break even. And at the moment, I have no interest whatsoever. I gotta say, I gotta put some more stuff in the setups channel because I'm very active in Discord with regards to the diamond channel all the time, and I write all my thoughts and ideas. Yeah, you know what I mean. I gotta keep up with all of the channels. So yeah, okay. Let's start with the analysis now, and then we'll have a good idea of where price wants to go according to the Elliott Wave probabilities. Of course, in the setups channel, I might not post every setup, but a little bit more action, sharing some ideas would be good, because it's actually been quite a nice bit of trading. I can show a screenshot later about what plans we had locally, or what I had locally. Your CVD video, I've been analyzing the rest and I watch it. Cheers, Casper. I'm happy to see you using CVD, or at least exploring CVD. I think it's a very powerful tool. Like what I say at the end of my videos is exactly what I think it is. For me, CVD is the best tool that you can use, the best indicator someone can use. But that's of course a bias. Some people will say RSI or other stuff, order flow and whatnot, but for me CVD is absolutely brilliant. I love using CVD in my trading, but it takes some experience to get the hang of it. Okay, let's start, shall we? All 150 of you, welcome to the live stream. My name is Koen, 31 years young, and I'm going to guide you through the chart following Elliott Wave theory, which that's what I love to do. No? So in case you haven't been here before, good to have you here. Hopefully you're going to enjoy it. We're going to start on the daily time frame. Then we're going to zoom into more local price section. And I actually wonder if I want to do the weekly as well. Yeah, we're going to do the weekly as well. Let's just do a full overview. And I'm going to cover these three as well, so that we have everything in one live stream for all of you. Okay. Yeah, it's quite a lot of alternatives on this time frame, but let's just go through this. Okay, we're almost at minute 15, so I'm gonna start in 1 minute and 10 seconds, so that I have a clear number for the pinned comment at the end of the analysis. I tested out different CVD indicators and found the TradingView CVD better. Do you have any thoughts on good CVD indicators in TradingView? Unfortunately, I do not. I have never used CVD on TradingView. I do know people in Diamond that have tested the CVD indicators in TradingView and different indicators, but they have not found the same result as with AGGR. So I can't recommend a TradingView CVD indicator just yet. But if you have a good idea, I'm happy to explore at least the opportunity and see what's up. Bina, good to have you here. Eric, lovely. 2 Erics, by the way, welcome. Cheers, Mark. Andrew B, good to have you here once again. How are you doing, man? How are you doing? Let me open my water bottle for, gonna start in 15 seconds. Doorbell. Thanks, Ash. Ding dong, ding dong, ding dong. Okay, let's go, shall we? Let's start the analysis. We're going to start on a weekly time frame. Now, it's quite interesting. On the weekly time frame, there's a couple of options with regards to the bullish scenarios. Now, just before we start, the bullish scenarios on a weekly time frame have a higher probability compared to the bearish scenario, right? For a bearish scenario, to gain in probabilities, we need to at least tackle 38.5. As long as we have not tackled 38.5k and we move below this level, probabilities are higher for the bullish scenarios, period, right? So there's a couple of scenarios that I'm going to show you with regards to the bullish trend. It might be a bit much, a lot of info, but just know that the direction is the same, right? So the first one I want to show you, welcome MS as well, is a 1112 here. This is arguably the most bullish scenario at the moment, right? You have a 1-2-1-2-1-2. After these wave 2s, you're looking for a very big wave 3 to the upside, right? A wave 3 is commonly the most impulsive, strongest, biggest wave in an impulse. So you're looking for a very big wave 3 to the upside, and then a wave 4, 5, 4, 5, 4, 5. So you still expect a lot of grinding and price moving towards the upside even after the strongest move, which we didn't see yet. Now, the common target area for your wave 2 is between the 05 and the 786, which is 53.3k and 44.2k taken from the low to the high of the blue one. The 382 is uncommon for a wave 2 and the 886 is very rare. You don't want to hit that 886. Now, what's interesting here is that, as you can see, the previous wave 2s did not hit the common target area for a wave 2. Which also makes you think, like in a very strong trend, yes, it can happen that a wave 2 is very shallow, right? But with regards to probabilities, we actually don't really like to see wave 2s bouncing between the 236 and the 382, as preferably we at least hit the 382. Anything above the 382 is actually quite rare. So that is something we at least take in mind. But this is by far the bullish scenario, most bullish scenario at the moment, with the invalidation at 38.5k. Now, the scenario that is the least bullish scenario is that you already have a finished 1-2-1-2 and 3 is in. As mentioned just now, your wave 3 generally is the longest, strongest, most impulsive wave, but as you can see, this one is actually quite short. So what you're looking for is a 1-2-1-2 and an extended 3, like you want this to be very long, right? But you can see this one here is quite similar in length compared to your wave 1, right? It's not very extended, which is something that we do like to see. Common target area for your wave 4 is the 382 to the 05, 57.5, 53k, taken from the low to the high. Invalidation, the 0.618 at 49.3k. Hitting this invalidation here invalidates a wave 4. Therefore, it invalidates this bullish scenario. But it's still valid for this scenario, right? Because the invalidation here is 38.5. Right? And as long as we don't hit 38.5 as mentioned, probabilities are surely higher for upside and the bull trend to continue. A scenario that doesn't have the highest probability, but is at least worth mentioning, so this one has the lowest probability out of the 3, is a double 1-2, where you have your wave 1-2-1-2, you look for a move up. Common target for 2 is the green box, taken from the low to the high of green 1. The reason that this has the lowest probabilities at the moment is because this wave 1 in green is longer in time and price compared to your yellow wave 1 here. And preferably your lower degree wave 1 is shorter in time and price, right? Because it's a lower degree wave 1. 1, 2, 3, 4, 5 in yellow. And then inside the wave 3 in yellow, we count the green count. So preferably it's shorter in time and price, but this wave 1 is longer in time and price. You can see that by price passing this 1-to-1 here, taken from the low to the high of 1 to the low of 2 with the trend-based fib extension tool, meaning this green one is longer, and the vertical line is the fib time, taken from the low to the high of 1 to the end of wave 2, comparing the wave 1s in time. Lowest probability scenario, still worth keeping an eye on. Now the final one, which I don't have on my chart, is a 1, 2, 3, 4, 5 wave structure, but I'm not a fan of that at the moment and it doesn't have high probability. So currently the two highest probability scenarios on the weekly time frame is this one here, right? Looking for a 4 and then a 5, invalidation 49.3, and the 1112 where you have a lower invalidation. As long as you don't take 38.5, the bullish probabilities are definitely higher compared to more bearish probabilities and more bearish scenarios where you're going to be looking for price to move to a lot like lower prices, right? Zooming in to the daily time frame, your bullish scenario here, which in my opinion is out of the two bullish scenarios the most interesting one. Now we'll get to probabilities at the end of the analysis, so you might get confused, lots of information, but at the end of my talking I will show you the highest probability scenario per time frame. Okay, so on the daily here, this one for me is very interesting because of the psychology. Besides, it's a valid scenario. So you have a three-wave corrective structure in an ABC, right? It's a zigzag. Diagonal A, looking for a zigzag in B, and a wave C to the downside. Common target for your wave B is on the chart, taken from the high to the low of A, 71.9K, 63.1K, the 302 to the 886. Wave B has to be a three-wave structure. We're then looking for a 5-3-5 zigzag in this particular scenario. Invalidation is the high, preferably B is finishing after the 302 fib time, taken from the start to the end of A, which is the 19th of May. I have opened a good one. So the reason I think this one is very interesting from a psychology point of view is because of a triple top. Now, by all means, I think in general it's interesting to take the lows here at least one more time, which happens with this particular scenario as you're looking for an A, B, and then a wave C to take the low. The reason I prefer price to first move up a little bit further, ideally, is because of the mindset of the market. So the moment this low was made and price moved up impulsively, you immediately saw a sentiment switch in the market, people getting very bullish, right? And looking for all-time high and 100K next and 500 and whatever, you know. However, with this scenario, we get another push to the upside, preferably on high volume in a wave C, to create a zigzag. A triple top. What happens here? People get greedy, FOMO, gonna buy, looking for all-time highs, 100K next, I'm gonna miss the boat, blah, 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 blah. But this is then where your absorption is taking place of market longs, and we move towards the downside, creating a triple top on the chart, getting a wave C to the downside, which preferably is high volume. Wave C should be an impulse to the downside as well. As mentioned, preferably then ending on a high amount of volume because it creates fear, creates panic, creates people talking about 15K, creates people talking about the bull market is finished, right? When price is over here, everyone talks about 1 million and whatnot. When price is here, people are going to be talking about, oh, the trend is finished and, you know, whatever. It's the emotion. It's the typical emotional roller coaster you see in the market. Don't follow crypto Twitter. It's going to hurt your brain, right? Follow yourself. Stick to the chart. Stick to the information the price is giving you. But from a psychology point of view, this is an incredibly interesting scenario. It doesn't really necessarily make this scenario more or less valid. It's just that psychology wise it's very interesting, right? It has to match the Elliott Wave rules, which it does. So in this scenario, preferably we see another move towards the upside, and then over here look for resistance. We do have some additional resistance in that area. So we have the blue box here just above the golden pocket, 68.2, 69.2, and then around the 886, 786, 70.7 to 72K, right? Very, very interesting indeed. Your very simply most bullish scenario is your low is in and you look for an impulse up. 1, 2, 3, 4, 5. Pretty boring because of course you just expect continuation to the upside and that's it. What is interesting is this structure, looking for a wave 3, is exactly the same as this, but then you're looking for a wave C. So the price action between the most bullish scenario, continuation to the upside in wave 3, is similar to a zigzag to the upside in a wave A, B, C. But then you're looking for a wave B. So in both of these bullish scenarios, we're preferably looking for price to move up at least one more time. But from a psychology perspective, I would prefer this over continuation to the upside. Side note, by the way, we have a weekly gap on the weekly time frame. This is your gap over here, all right? Weekly order block, price moved up, and the low of the next candle. This creates a gap. Very often, the first time you hit it, a gap is respected and you see a bounce. The moment you come back here again, it does increase probabilities to fill this gap. Now, one time frame lower on the daily, we have closed a candle inside the gap. We had some additional support resistance for the ones that remember over here on the 4-hour chart, which got nicely respected as well. But it does increase probabilities to fill this gap sooner or later. Of course, we have to first see local weakness, but filling this gap could happen as well with the ABC, which is interesting. Now, with regards to support to the downside, if you do take the low over here at 56K, then the pretty much next areas, 54.4, by the way, there's a daily naked point of control there. But with regards to the blue box, 51.6, 51.9, and then we have 49.1, 49.7, and then we go to the mid 45s, right? So, or the mid 40s, that is. More local support, 59.4, 60K, 57.9, 58.3. More local resistance, by the way, 63.4, 64K. Very interesting indeed. Okay, zooming in once again. So we're going from the daily, weekly, daily, down to the T, right? Down to the local structures. This move to the upside here counts best as an impulsive structure, which means this can either be a wave A, a wave 1, or in the bearish scenario, a wave C. If this is a wave C, and I'll highlight this in a second with regards to the daily bearish scenario, if this is a wave C, it has to be part of a flat structure or a zigzag. But in a zigzag, we need a wave A, B, C, which clearly is not the case because we don't have this price action, which means the only option to count this bearish as a wave C is a flat. And then an A, B, C. But this wave C did not take the high of your wave A in an expanding flat, which means this is now a running flat. Wave C not taking the high of A, running flat, very rare, never preferred unless all of the other structures fail, which means pretty much you got to take the low. That is when all the other structures are failing. So the probabilities are higher naturally that this is an A or 1, just because this wave C would have to be part of a running flat, which is very rare. It's the least common or rarest flat pattern. Most common is an expanding flat, right? A, B, and then C ending above. Then you have a regular flat, A, B, C, still C ending above A, and then you have the running flat, right? So something to keep in mind as well. So if we look at the highest probability scenario, right, as long as invalidation isn't hit, we're looking for a continuation to the upside on the 4-hour chart. You have an A or 1 looking for 2B and then a move up in a C or a 3. Here, in this particular case, we're not yet finished. I don't know sometimes in how much detail you want me to talk, guys, but of course there's a scenario where we're already finished. But in this scenario here, we don't yet have a finished B or 2. So we want to see another low and continuation to the upside. Golden pocket to the 786 is your common target area for a wave 2 from the low to the high of 1, 59.9, 58.4. What is interesting here is that this low, right, reversed to the upside just before hitting the golden pocket. And it is very rare to see price move to the downside, get close to the golden pocket, but not touch it. All right, so it is something that's playing on my mind. And to be honest, I find it very annoying that it not only happened at the low. If you take a fib from the high to the low here, the same thing happened at the high. Like, holy moly, we missed out on hitting the golden pocket again by a few dollars. So it's almost like pissing me off, you know. So it's something that we definitely keep in mind, because it is common for a wave 2 to end between the 05786, that's your common target area, and the 05 is hit. It's just that we got so close to the golden pocket, why not hit the golden pocket, you know what I mean? And also we have a 2-hour gap. So on the 2-hour chart, same as on the weekly, but now lower time frame, we have a 2-hour gap here, closed many candles inside, which does increase the probabilities to fill the gap, which would mean touching the golden pocket. So something that we definitely keep in mind. The 886 is common for wave B as well, rare for a wave 2. So the moment you hit the 886 and we get a move to the upside, probabilities are higher. It is a wave C. In other words, probabilities are higher for an ABC and a move to the downside afterwards. Okay. Inside wave B or 2, we need to look for a 3-wave corrective structure. A or 1 is an impulse, 5-wave move, right? 1, 2, 3, 4, 5. B or 2, a 3-wave corrective structure to the downside. We are here then looking for a complex structure to the downside, which is labeled a WXY. We could have a double zigzag here, WXY, or still a double combo, and I will show you a picture of a flotty in a second. Now, first of all, a double zigzag. Put a fib on the chart because this one is important. Sorry, I'm still not fully used to the mouse. There's like this scroller, you know, and then if I scroll quickly, it just goes. It's the what is it, Logi MX Master 3 that I got from my wife, because it doesn't, like, she can't plug in a USB in her new MacBook. Lol. So I got the mouse, which is very nice for the time being, at least. So, and it's a great mouse, by the way, can recommend. I actually think the new MX Master is coming out later this year. Anyway, analysis. So with a WXY double zigzag to the downside, we are looking for an ABC in W, preferably a zigzag in a wave X, which is most common, and then another ABC to the downside in a wave Y. The moment price hits the 0.7 before taking the low, the probabilities for a double zigzag to the downside will significantly go down. All right, so the 0.7 here is sitting at 63.9K. Price moving up and hitting this level, low probabilities for a double zigzag. In general, preferably this is already your high of X and your X is finished, and you look for a wave Y to the downside in a zigzag, wave A, B, and then a wave C. Common target area on the chart here, 0.618 to the 1.236, 60.1K, 56.8K. Alternatively, this WXY, so in other words, we're looking for this low to be taken. Highest probability, at least on the 4-hour. A scenario that Flotty mentioned this morning, and is something that I had on my chart as well, is a sideways double combo. A zigzag in W, a zigzag in X, and then a flat in a wave Y. Something we keep in mind. Taking the high of X once more, hitting the golden pocket up here and the resistance, move impulsively to the downside to hit the support and also hit the golden pocket at the low. And someone else, I think it was Symbios, if I say that correctly, in Bitcoin TA earlier today, also showed a scenario which would lead to exactly this. So if I quickly go to, oh yeah, here, Sidiums, sorry, Sidiums. So Sidiums, based on something that I wrote in the silver membership about the two golden pockets not being hit. Symbios actually wrote this in chat as well, where, you know, or it's a fractal from May apparently. So price moving to the downside, hitting the golden pocket at the low, move up, hit the golden pocket at the high, and then move down to the support levels, right? The lower support levels, which is interesting. But in general, we're looking for price to move down, either in a zigzag wave Y or a flat, two highest probabilities. Your most bullish scenario is 2 or B being in. And this then has to be an impulsive structure to the upside. Now, this is where things become a bit more clear in case you got a little bit confused. I think sometimes I may have to show a bit less scenarios, you know what I mean? But I love to explain. So if this is the low of your 2 or B and you're finished with the corrective structure, we need to count one of 3 structures over here. If we can't count these 3 with at least a good amount of probabilities are higher, this is a corrective structure and we're taking this low one more time. So let's have a look. An impulse to the upside should be a 5-wave structure. 1, 2, 3, 4, 5. No overlap between a wave 1 and a wave 4 is allowed. We have our wave 1, our wave 2. 3, where's 4, 5? Wave 4 hit the 0.618, taken from the low to the high of wave 3. Invalidating a wave 4, significantly reducing probabilities for this impulsive structure to the upside. Inside this wave 3, by the way, we count a wave 1, 2, 3, 4, 5. We wanted to see another 4, 5. We didn't get another 4, 5. Then we have a diagonal. In a diagonal, we're then counting 1, 2, 3, 4, 5. But as you can see, this becomes an expanding structure. Expanding diagonal is very rare, never preferred, unless all of the other structures fail, meaning diagonal, low probabilities. And that then leaves us with a double 1, 2. And a double 1, 2 is a wave 1 diagonal, wave 2 perfectly fine, zigzag, and then another 1, 2, and we look for continuation to the upside. Now your second leg to the upside here, your second wave 1, is longer in price than your first wave 1. Trend-based subextension from the low to the high to the low. This is your first wave 1, this is your first wave 2. 1-to-1 is passed. However, in a double or even triple 1, 2, preferably your second wave 1 is shorter in time and price. It's not a rule, it's a guideline. It's something that happens very commonly, right? So preferably in a double 1, 2 or triple 1, 2, you have your 1, 2, 1, 2, 1, 2 up, where each wave 1 and 2 is becoming a little bit shorter in time and price. This wave 1 is bigger in price, this wave 2 is bigger in price as well. So it's not great probabilities. Let me actually check. We may have hit the 886 as well, by the way. And we also touched the 886. And the fact that we touched the 886 significantly reduces the probabilities that this is a wave 2. Because in a double 1, 2, 1, 2, right, the 886, very rare for a wave 2. Common for a wave B or a wave X. Increasing the probabilities, any move to the upside is corrective, not impulsive. Which in other words increases the probabilities to sooner or later still take this low. And that then means we're going to be looking for 2 scenarios to take this low. And those were the scenarios I highlighted with the WXY. A zigzag to the downside or a flat to the downside. And we'll wait and see what price wants to do, no? Also, small inter thingy here. There we go. Of course, have to manage at the same time. So, yeah. Hopefully that is very nice and clear. Okay, the most bearish scenario is that we continue towards the downside. So instead of taking 65, we're going to take 56. WXY. And this is a bearish scenario that, of course, eventually is still bullish. Most bearish scenarios, of course, continuation. But as long as we are not down here, it doesn't really matter. I can talk about it, but it won't add any value. So we first need to see price moving towards the downside. So here we have our WXY. It's a sideways double combo, regular flat in W, running flat in X. As mentioned, I spoke about it. This then has to be a wave C, creating a running flat structure, which is very rare, never preferred unless all the other stuff fails, which happens right? It's not that it has zero probabilities, but from an Elliott wave perspective and Elliott wave probabilities, a running flat is simply a very rare structure. So that taken into account, it's not the highest probability. But here we then move to the downside in a wave Y. Common target area for your wave Y on the chart in yellow, 56.7, 47.8K, trend-based sub-extension from the start to the end of W to the end of wave X. That of course means that locally we are then looking for price to move impulsively to the downside, where we have our wave 1 or A, WXY in a 2 or a wave B. Now let me go to the 1 hour time frame because this is important. 2 or B hit 05, taken from the high to the low of 1 or A, which is a common target for a 2 or B. That's not a problem. The issue I have with this structure at the moment is the sub-degree count of 2B, which is in white. So because of this move to the upside, we have to count this as a 3-wave structure. A, B, C. A zigzag here to the upside is then counted as a wave Y. We cannot finish A or 1 down here because A or 1 has to be an impulsive structure, and this move is very high for an impulse, right? 1, 2, 3, 4, 5 overlap between 1 and 4. So we can't use a normal impulse unless we talk about some sort of a diagonal, but you can see it's an expanding diagonal, which is rare, never preferred unless all of the other stuff fails. So it works much better to finish A or 1 somewhere here on the left, somewhere there on the left. Now, because wave Y is counted as zigzag, wave W cannot be a zigzag. It has to be a flat. Wave W in a sideways combo structure can only, so not a sharp is a double zigzag, but in a sideways corrective structure, where your wave X retraces more than the 07, wave Y and W can't both be zigzags. So wave W has to be a flat, can only be a flat or a zigzag. But the only way to make wave W a flat is to end wave A or 1 here, to then create that ABC flat structure moving below the low here. But this gets us into trouble with 1 or A, because that has to be a 5-wave structure. 1, 2, 3, 4 works perfectly fine so far, but your wave 5 to the downside, 1, 2, 3, 4, 5. Damn. Preferably we finish 1 or A here and not there. So ending 1 or A here, where is our wave 4? Right? 1, 2, 3, and then what? Where's our 4 and 5? It's not great. It's not great with regards to the probabilities of counting this WX and then a wave Y, where X also has to be a flat in an ABC with a very extended wave C, by the way, which is also not common. So it lowers the probabilities for this scenario, right, compared to the more bullish scenarios that I've already spoken about. Alternatively, this is an expanding diagonal, and then you have a zigzag in 2B, and you want to see a price move down in C or 3. Which is, it is yet to be seen, because in general, let me now talk about probabilities, right? Probabilities on a daily time frame. So this is where pretty much I'm summarizing what I've spoken about. It's a lot of info, but hopefully people learn a thing or two at the same time. Probabilities from an Elliott wave point of view are higher that this structure to the upside is an A or a 1 instead of a C, because if this is a wave C in the bearish scenario, it's a running flat, and a running flat is rare, never preferred unless all the other stuff fails, which therefore means that on a daily time frame, the probabilities are higher. We're going to at least see another move towards the upside, taking 65K before potentially later 56K. This then leads us to the two scenarios shown at the beginning, the diagonal, where we are going to be looking for a wave B, or continuation impulsively, 1, 2, 3. We don't have to know what happened, like what scenario then is more likely at the moment, because in both cases, you simply expect a move to the upside, and this move to the upside will give us the information that we need. Right? So currently, that is the highest probability, price moving to the upside at least once more. However, on a 4-hour time frame, based on what we have seen here, and the low probability of bullish scenarios coming off this low, the probabilities are higher that your low for BR2 is not yet in. And we're looking for either a zigzag down or a flat in a WXY structure, a sideways combination to the downside. The moment, if that, it's all probabilities. Now, the moment price does move towards the downside, and we're going to hit some of these levels down here and some of the support areas, we have to wait for proof of support. And that is because there's always that bearish scenario in the back of our minds. It's not the highest probability, but it never has zero probabilities. There's no certainties in trading. So the moment, right, price is ranging here, if it comes down, we want to see price holding these levels and then move up. Your absolute final level, what CGMs showed as well, is this here. This is the point of control of this little bit of price action. But if price comes down, proof of support, show prices to show us it wants to hold here, and we're going to look for price to move up. It is the highest probability, but we just want to be a little bit more safe and see what price does locally. Market structure change, bullish CVD divergences, whatever you're looking for, that gives you the confidence. All right, so highest probability on the daily, a move up. Highest probability on the 4 hour, still looking for this low to be taken sooner or later, either in a zigzag or a flat structure, where you first take the high, hit the golden pocket, hit the resistance, and then move to the downside to look for price at support. And then we want to see some proof of support and take it from there. On the 15-minute time frame, of course, we had some news just now, leading to a very big wick over here, which is, of course, quite interesting. I gotta, like, please, I should almost put a box here, because this is very ugly on the Coinbase chart here, right? This is not visible on most other charts. I think on none, maybe no other chart. But this structure so far to the downside counts quite correctively in a way. There's a lot of overlap here in the beginning, and yes, we have a quick move down and sideways again and a quick move down. It doesn't really look that impulsive yet. So arguably that flat might have a higher probability than the zigzag to the downside. Yeah, that's nitpicking. So by all means, the probabilities have been communicated, and we wait for price to show us what it wants to do. So would be good to hit the golden pockets. We do have bullish CVD divergences, by the way. So higher low in price, lower low on the CVD. Target would be this high locally. So pop up, zoom out. So yeah. Now that Flotty is here, there he is, was about time. Let me show this. So always in the morning, I first do my own analysis, and then I always check Discord. And I love the fact that Flotty is very active with his counting as well. So Flotty was like, "Yo, Koen, you know, what do you think about this, right? What do you think about what you see here?" So he had WXY, where he had a flat ABC in wave Y. What you see on the chart was my trading plan as well. He just copied my chart and wrote his stuff on top of it. So short here, long here, short at the box. You know, this is now in play, and then potentially, if we see signs of strength, as mentioned, potentially a long, but. So he was like WXY. Of course, my W and my X, my W would be here. My X is at the same place, right? So that's fine. And then in Y, we have that potential ABC in a flat. So yeah, I absolutely agree with the thought of Flotty there. So yeah, very nice, very nice. I like that Flotty is also a full-time trader with Elliott Waves. There's a handful in the group, as far as I know, so it's good to see. It's good to see. Okay, started at 15 minutes. And there you go, everyone. Yeah. I mean, if I have to make a choice locally, so daily probabilities for our probability is quite clear. If I have to, without analyzing this area in detail with FIP pools and everything, you can kind of see the amount of overlap we have, right? While price is grinding to the downside, especially in the beginning. So I would say the probabilities are higher for it to be a corrective structure, which would increase some probabilities for that potential flat in Y, which would be an incredibly interesting scenario as well. Because wave C, wave Cs tend to be quick structures in flat scenarios. So if you do get a wave C to the downside in a flat for an A, B, and then a wave C, if that wave C is very fast, very quick, high volume, and you're going to move to lower levels, it creates panic, creates fear. We like that. Okay. Opa, voilà. Which scenario, Matthias? The one that is working on a B before a C up. The one where it is working on a B for a C up. Oh, wait. You mean on the 4-hour time frame? You mean this? I think this one. Yeah, probabilities for this are higher than your wave 2 or B already finished, or price taking the low at the moment. And that is that's just because this move up has a higher probability of being a wave A or 1 instead of a wave C. Because if this is a wave C, it can only be a wave C with a flat, but then you have a running flat, and a running flat is rare. So it's never preferred unless other structures fail. But they haven't failed, because pretty much your failure would be price taking the low. So and of course by that time we know, like, if price takes the low, then okay, cool, and we got clarity. But as long as we don't, the highest probability is this. And because locally here, right? Because locally we can't count a nice impulse up. A diagonal becomes expanding, which is rare for the bullish case, right? Or a double 1-2 has a second wave 1 that is longer than the first. The second wave 2 is longer than the first in price and time. And we hit the 886 for a second wave 2. It's also low probability. Increasing the probabilities, everything here is corrective. Increasing probabilities to take this low. Increasing probabilities for 2 or B to not yet be finished. So, you know what I mean? It just adds up. But that's how you want to think. So of course the structures locally here impact the probabilities of the higher time frames. That's why I really like enjoying low time frame or counting low time frame stuff. So yeah. So probabilities for this would be high, yeah. Cheers, Matthias. Yeah. Let me go to the 1 hour, because there's so much noise on the lower time frame here. Hey, since when is a pinned comment white? YouTube, always innovating. Are we looking for... Wait. Try it once more, mate. Are we looking for a short or a long? Depends on your plan and strategy. I'll talk to you about the 6 steps that you have to follow to build a plan or a strategy very soon, because it will benefit you. Because what you are looking for is your own personal choice. Other people might look for longs while you're looking for shorts. Other people might try to look for longs on a 4-hour time frame while you're looking for shorts on a 1-minute time frame, because you're a scalper and there are like more swing traders. So it very much depends on your plan and your strategy, but I'll talk about that in a second. We were here. Suhail, welcome. Rostam as well. Open your chart. Already did that. Yeah, cheers, Sarah. I took the same short with CD. Thanks for learning. Always a pleasure offline. Good to see. Good to see. I like it. I like to see people learning more. Also, CVD. It's a great tool. It's a great tool. Thanks, Mark. What's up? Good morning, Adam. How are you doing? Is it a new feature saying that you can add text at fib levels? Add text at fib levels? No, I don't think so. No. No, you can just use prices. Yeah. Haven't seen that one yet. Dutch fibs. Yeah, so the probabilities, of course, have been communicated. What's up, Ways of the Jedi? How are you doing? Bottom feed is doing their things. Leave my wife out of this, Jedi. Oh, boy. From LA, Rob. Good to have you here. Welcome, welcome. Fell out of bed again. Everyone is looking for the same trade. Yeah. So, but it is interesting to... sooner or later, like probability wise, it's high to hit it. You know, it's quite rare for it to get so close but then leave it hanging. But also, if this is the low and this is an impulse up, or one of 3 impulsive structures, all 3 of them don't have high probabilities. So visiting the lower golden pocket would be nice. First touching the upper one to create a bit more bullish sentiment might be interesting with the flat. In that case, of course, we have the bullish CVD, so these might then also play out. Thomas Tribula, welcome. Errol, good to have you here. By the way, Stupa, good to have you here, of course, as well. Destin Innovation, increased probable market use Elliott Wave as well. It's interesting to spot it when that happens, though. How come bearish CVDs play out way more than bullish ones? Both ways. So bullish and bearish CVDs both play out, but it depends if you're, of course, at support or resistance. Here, the bullish CVDs played out. 2, we had bullish CVDs here, bigger bullish CVDs as well, and these played out with price moving up. Yeah, exactly. That would be interesting. That's also what I like to look for, Liquid Mafia, is eventually create another low. At least that's what I would like. We have to wait and see what Elliott Waves give us, but I would like to create a bit more fear, right? Get the greed out of the market. Isn't expand to take Ultimai, go down in 5 to fill the monthly gap to 52k. Jillik, it is a possibility where instead of the zigzag you move above all-time high, but it's not the highest probability as long as you're not at least close to getting to the all-time high. So it would be a bit early. So what Jillik is talking about is this. Right, so and then you have your pocket for an expanding flat where the common target is the 1.236 to the 1.38. For an expanding flat. And then you go down in C. Now, so the common target for a wave B is all the way up here, and because an expanding flat is most common. And a wave B has to be a 3-wave structure. Now, if this is your A, B, C, and most commonly wave B in a flat is a zigzag, by the way. So if we internally look for an ABC, let's do this first, right? Because that is most common. You can already start to see now that your wave C to the upside has to be very long. This is your common target area for your C, most common. The 1.618 is still okay, but you can see it's quite far away from your common target area of a wave B. So that reduces the probabilities for a flat, just because your wave C has to extend so far to increase probabilities for a flat on this time frame. So therefore it works better to look for a 3-wave ABC for the wave B before taking all-time high reverse, creating a triple top. Of course, a fake out above all-time high and then bring it down would be very interesting. But at the moment, it's not yet highest probabilities. You know, we definitely need to wait for more info in that case. We covered that one. Buona dia. Yeah, Powell is talking about 33 minutes. Cheers, Waste of the Jedi and Cheese. Good to have you here once again. Don't spam him, he will catch up to chat. Yeah, thanks, Adam. What are your favorite indicators for trading alongside Elliott Waves? CVD. I have a video on my chart. I have a video on my chart. I don't even know if that works, if you can have a video on your chart. But if you go to my YouTube channel, scroll down, CVD for beginners, this one here. And this explains everything about CVD. And then in Discord, I have a channel that is called Good to Know. Here's a one-pager about CVD, including a link to the video, the link to the website, which is AGGR, it's a great place, by the way, and the template. So yeah, it's all there. When I hover my mouse over a fib level, it says add text. I can't find it in the fib settings either. That would be something new. Okay, let's see. I hover over it. Nothing happens. Add text? Wait, I don't know. Maybe let me refresh. Would be quite interesting. I don't really think it's on my chart, or they you know. Beep. Nope. It's a Jeroen special. I can't. I can't. I've sent a picture in the lounge. The added text feature in TradingView. Interesting. Oh. That's an interesting one. Add text. I have no idea. So yeah, it's not a text box. That's a new one. I don't have that same option on my chart. Interesting. What's up, Christian? I don't really know. Like, so I wouldn't use that extra bit of text on the fib, but I can imagine maybe some people like it. Bitcoin just hit liquidity grab at 60K. Yeah, moved into this range, right? Structural support. Don't we have to have volume to reach the all-time high? We are not seeing the flow cap. Of course, yeah. I mean, in general, if you want to take all-time high, continuation to the upside with a volume would, of course, be good to see. But in corrective structures, and that's what I would like, if you do go for that ABC up and not take all-time high, but do go up in volume, and up in volume does not mean like record volume, by the way. So go back to the daily. So as you can see, so far, this is a typical range sideways. People call it a bull flag, I suppose, and volume moving down, right? Now, what I can imagine people like to do is they like let's say traders that just started or traders that are trend line traders, they'll probably have something like this on the chart, or maybe they do this as well, because they look for simple patterns. So you or maybe, I don't know, maybe they did this as well, but you know what I mean. So this trend line has now been broken, and then we move up and we backtest the trend line, and then we expect continuation. And then if we break this trend line and all-time highs next. So for me, what I think is very interesting is to break this trend line, right? And break the trend line with a wave 3, retest with a wave 4, move up in a wave 5, take the high, act like it is a retest, and then move down. Interesting, no? That's what I would like to see. But it's a legit scenario from an Elliott Wave point of view, but we just don't have that information just yet. Because in B, you're then looking for a zigzag in an A, B, and then a wave C to the upside, and your wave C needs to be an impulse. 1, 2, 3, break the trend line, 4, backtest trend line, 5 to the upside, hit the resistance. Trading view, please. Uh-oh. Am I still live or are we out? Trading view doesn't want to. My AGR is still working, by the way. It's just that my trading view is out. I'm here. Oh, yeah. Nice. Yo, trading view. Okay, 1 second here. Close the page. Close the page. They are watching me. Trading view has been unstable for me in the last few days too. Yeah, for me too, man. Like same. Like I had that the live stream I did 2 days ago. Trading view was buggy. So it was sometimes just like going black and then back to screen again in a second. So yeah, not too great, but anyway, it doesn't matter. Here, what I wanted to do is hopefully it works now. Oh my god, man. I can't open my target boxes. It's not even that big of a folder. Like, come on, trading view. My targets are crashing trading view. That's an interesting one. Anyway, doesn't matter. I have a target. Luckily, I know all this stuff out of my mind. Literally, just during the analysis, I actually showed all the targets on the live stream as well. So it's interesting that I can't seem to open the folder now. But we do have. Man, my target boxes are so influential, no one is allowed to see it anymore. So we do have resistance here between the 786 and 886. Right, we have a target box. So we have a box here just around the golden pocket and another box above. So it would be nice for your wave C in an A, B, C, and B to then 1, 2, 3, 4 retest trend line, 5 hit upper resistance and then move down. So you create the fake out effect of moving above the trend line, retest, move up, break the high again. What are people doing? Longing, right? That's one of the first things you'll probably learn in trading, like patterns, trend lines, and then seeing that would be very interesting. Holy moly! Took me a while to actually explain that. Have there been any shorts on Bitcoin that you could not find account for? So far, no. I never had that problem. So what I what I do sometimes do myself is, of course, with Elliott waves, not always are structures very clear, as in you don't yet fully know how to integrate that certain piece of price action. In that case, it's better to zoom out instead of zooming in. It's a mistake I did in the past, is you try, maybe on a 4-hour or daily time frame, you're like, okay, what is this? I can't count it. And then you go to the 4-hour time frame, and then the 1 hour, and then the 50-minute, and then the 5, and then the 1 minute, and you're trying to figure it out. Instead, it works best to zoom out, wait for some new information, and then it becomes clear. So you have to wait a little bit. It doesn't happen too often, but can happen. Also, what I like to do is once new information comes in, I very often remove previous detailed structures. So pretty much at the moment, because of this move up, I don't need all of this in my analysis. It's just that I like to explain to people what this move to the upside could mean. But this I can now only use this. I could focus my analysis only on this picture here, and the probabilities would be the same. Just because we know this is an impulsive structure to the upside, highest probability, A1 or C. For a wave C, this has to be a flat. So, okay, I need to use this bit, but we know running flat is rare. So higher probability, we're looking for an ABC or 1, 2, 3, which means I can pretty much focus on, okay, what is happening here on the lower time frames. And you see me do that very often. I like very clean charts. I don't like a lot of stuff on my chart. You have people that keep their counts on the chart, on the, like 15 minutes and all that stuff, and it creates for me a very messy chart. Even though the counts are old and we are now here, keeping all of this on the chart, I always remove it. I remove all the details. So, which I mean, pretty much you can already see locally. With the bullish count, I just have a wave 1 or A here. I don't show the sub-degree count here anymore because it doesn't matter. It doesn't matter where your wave 1, 2, 3, 4, and 5 is. It's just that based on the info that we got afterwards, highest probability is an A or 1 here in the bullish count. So I remove the sub-degree. Same with the move down here as well, by the way. I don't have the 15-minute count here, only counting this and then W. It just creates a lot of like space on the chart. Let's see if I can open my targets now. Yeah, okay, there we go. Nice, okay. You're sadistic. Yeah. Cheers, Samuel. No, I'll drink on that. Do we have a triangle in the making? I guess you're talking about local price action. Oh my. AGGR is working. The ticker is working. Price is moving. Trading view? I don't know. Oh, it's going to be an interesting stream. I shouldn't change too much on trading view, I guess. Let's just answer questions while trading view is doing whatever. A triangle. Now, with regards to a triangle here, you need to look for this to be a wave A, B, C, D. In that case, your wave C is not yet finished. You're still looking for D. I only start to look for triangles after a wave D is in. Before a wave D, there's probabilities, higher probabilities for other structures. So this would be your wave A. This would be your B, right? Can happen. You can have an ABC down here and an ABC up. So that's your A, B, and then you look for C, D, E. But I would still wait for a D minimum. Yeah. Nuke it. Click a fib line to make it active, then move cursor over to add text and do a double click on it. Now you can enter text. Interesting. Click then move cursor over to add text. I had no idea. Trading view innovating, but at the same time they're bugging. I don't know, like they're updating stuff, but yo, it's not great. Let me just reopen again. Hoppa. And then when I hover over the fib, it says add text. I have to click on it. Yeah. Well, I clicked on it, but it didn't say, so I don't know. Maybe they're currently updating my trading view window. I have no idea. What a weird situation to be in here. They are watching you, I know, right? Trading view not work on the live stream, never preferred. Exactly. What the hell? Cheers, MS. How do you move the fibs horizontally with the mouse without changing it? Hottentotten. 10 press shift and then so click on the fib, press shift and then move it sideways. So it's the shift function. Thanks, Errol. What Errol says. They are still like, what's up? Maybe a band-aid. How are you doing? Yeah, I actually have a video on my YouTube account which is all about cleaning up your chart. It's called How to Avoid Analysis Paralysis. It's already a year old. Look at my beautiful thumbnail that I got from Google. So basically what I show in this video is how to clean up your chart and avoid analysis paralysis at the same time, because you don't have a line everywhere on the chart. So yeah. Cheers, Adam. Cheers. Bitstamp price still not hitting the 886. Okay. Yeah, on my chart it did here at the low. So yeah. A little bit of price action. Let's see. We have 17 minutes left, and then we might get some more volatility. Maybe. Ismail, by the way, welcome. Good to have you here once again. It's been a while. It's been a while since I've seen a message of you back in the live stream. Good to have you here. Paralysis by overanalysis issue, agent. Maybe a band-aid. Go to the gold playlist, like in Discord. Go to gold, right? Playlists, educational playlist, or the Elliott Wave theory playlist, and then the target box video. Hopefully that will help you with overanalysis and your paralysis. Of course, there's a public video, but in that video in gold, I take a bit more time and talk in more detail about things. So hopefully that one will help. Because in the past, when I started, I was learning all the different tools in TradingView, so I was using everything, and yeah. And you start using trend lines and channels and fibs and speed fans and volume profile and time frame horizontals and naked point of controls and support resistance levels and whatever, right? Like there's so much shit on the chart. It's so saturated with lines that I was like, what am I gonna do, right? What am I gonna trade? Now, of course, the condensed areas are stronger, but I had a line everywhere. So eventually, that is where what I call target boxes came from, which is the blue boxes that you see on the chart, or white once they're hit, which are very well respected, because those are my now condensed areas of support resistance based on the tools that I like to use. So a lot of the tools that I used to use are out the window. I don't use them anymore, right? I rarely ever check them. So VWAP, order flow, speed fan, channels. I don't really use channels. Like lots of stuff that I tried and I explored in the past. Step one of the 6 steps, everyone, is stuff that I eventually removed from my analysis because for me it's not relevant anymore. And that then brings me to the six steps that in order to create your personal trading plan and your strategy and even a clean chart, the 6 steps to have a high probability of becoming consistently profitable really help. And step 1 is exploring and trying as many free tools as you can. Build experience. And that is probably the phase where you are going to have lines everywhere on the chart because you're just testing everything, right? you're testing the channels and the volume profile and the speed fan and the Fibonacci and different levels of Fibonacci and trend lines and whatever. But that is an important phase because you build experience with all the different tools. But then in step 2, that is where you're going to minimize. Less is more is step 2. After you build experience with tools in step 1, step 2 is find your favorite tools and build statistics on these tools. And then you remove the rest. You're going to focus, right? You go from a lot of different tools and a lot of experience. You're going to zoom in to only the tools that you actually like to use. And you're going to build data on these tools. And then step 3 is you combine some of these favorite tools into now a strategy. So step 1 is try as many as you can. Step 2 is build statistics on some of your favorite tools, like individual statistics per tool. And then step 3 is you combine some of these favorite tools. So you might, again, reduce the amount of tools, combine some of them and build more data and see how it works. What's the win rate, risk to reward ratio, Step 4 is tweaking and adjusting, like add a tool, remove a tool, see what it does. And then step 5 is actually starting to trade it. But now you have condensed your experience to such a specific set of tools that very likely you're going to have very clean charts because you know exactly what you're looking for. You know the tools you like to use, you know what you have to wait for, you know the rules of your strategy, you have the data, and that is what will really help with your trading because you have clarity. You don't have to enter YouTube chats anymore, for the people that sometimes do, and ask, are we long or short, right? Because I immediately know if you ask that question, clearly you don't have a plan, right? It's obvious. But by going through these steps, you build a plan for yourself and you know exactly what you're looking for. And then step 5 is you trade it, work on trading psychology, and step 6 is upping your budget. So these steps, it's not only creating a plan and a strategy, it's also avoiding people to overanalyze, analysis paralysis. It helps with emotions. Going through these 6 steps helps with your emotions because collecting data will help you with your emotions as well. Because if you know that your combination of tools has, by data, right, based on data, has a win rate of 50% with a 1, 2, 3 RR, and you have about 3 setups a week, like 12 in a month. I mean, you're like just follow the plan, right? You like if you know, okay, based on 100 of back tested and forward tested setups, this is my RR, this is my win rate, this is my most profitable day, this is my best target, 1, 2, 3 in this example. You just follow the plan, right? You just take the trade whenever the opportunity comes. You just take it. So it will help with your emotions as well because you're simply going to trade data instead of I think price goes up or down. You have a statistical backup. I know based on my data that I should take this trade, and I don't care if it is a loser or a winner because I know based on 100 trades that I'm going to take, I will have about this amount, right? 50% win rate, 1, 2, 3 RR. I will have around 50 wins. I will also have 50 losses. I don't care if this trade, according to my plan, is a win or a loss, because I know that in the bigger picture, I'll have 50 wins, 50 losses. And if I have a win, it's a 1, 2, 3. And if it's a 1% loss, right? So the data will also help you with your emotions. You're just gonna trade data. And that is what really helped me in my trading. Elliott Waves is a bit different. Elliott Waves is probabilities, it's knowing invalidations, and it's a lot more, I mean, trading Elliott Waves, it's a different setup every time. But with my other strategy that I have developed following these 6 steps in about 2 years, 1.5 years, 2 years, I'm already using that for a very long time now. I mean, that one is purely based on data. Whenever there's a setup, trade the setup. Yeah. And I can have 5 losses in a row. I can have 10 wins in a row as well. Yeah, it's part of the job. It's part of the thing. Average win rate about 60%. 1, 2, 3 RR, and Not too many setups in a month, but that's okay. It works for me because I like to do a lot of other stuff. Arguably, I trade more Elliott Waves than I do with my statistical strategy, but both profitable. So because of my knowledge about Elliott Waves and then knowing how to trade it. And then the other strat, yeah. But yeah. Paul speaking in 9 minutes now, yeah. Not me sitting here watching the price bouncing off the VWAP. If the VWAP is a tool you like to use, make sure to collect data. I mean, I used the VWAP for actually quite a long period because it was part of my strategy in the past, till eventually I threw it away. It's too up and down. I don't like fluctuating stuff. I like set levels, like horizontal. Yeah. 9 is my favorite number. Maybe that's a sign. What are your thoughts about it? About trading in the future? The simple things cannot work anymore because all people can learn easy. I think probably people thought the same 10 years ago, 20 years ago. Now, Elliott Waves is a difficult theory, and it's already working for decades now. So in the future, I have full confidence that Elliott Waves remains Elliott Waves. It's still, it's still based on what we see on the chart. With regards to creating a strategy, as an analyst, it is very important to always keep an eye on how's your strategy performing. So once you collect data in step 2 or 3, which usually is quite a lot of data, once you have your plan and your strategy, what I do is, if I'm not really looking to innovate my strat, what I then do is I only collect my win rate and my RR. That's the only 2 things that I care about. And I collect it per month. So I keep track of the trades in a month. And then once the month is finished, I have a monthly data list and I put the month in there. And then I start over with the individual trades for the new month. And based on the data that I collect, I can always be like, okay, maybe it's time to innovate something. But what I also like to do, this is personal. So basically what I'm saying before I continue is, once you got a plan and a strategy, you're always in step 4. You're always going to tweak and adjust, and you're always going to keep an eye on how can I improve. But once you have a strategy, I like to minimize my data tracking. But I do spot patterns very easily. So once I'm trading my strategy and I see, also based on data, but I also recognize maybe a new strategy or a small tweak, that is when I go into collecting a lot of data again. Which at the moment is not the case as it stands. So but trading can be very simple. The problem is most people don't have a plan. They don't have a strategy. They look online for signals. They want to skip the process, but you can't skip the process. If you want to be long-term profitable, you got to learn to make a plan, or not learn to make a plan. You got to put time and effort in creating a plan. Unfortunately, that time and effort is time and effort that most people don't want to put into their trading. Then what you're doing, right? It's unfortunate because those are the people that lose money, and then they're like, whatever, it's not for me. I keep losing, can't make it. Yes, you can. You can be profitable. You can make it. You put in the work, you'll see the profit. It took me 2 years to learn Elliott Waves to such a degree that I really became profitable with Elliott Waves, like significant profitability. And it took about 1.5 to 2 years to develop my personal trading strat based on data, from exploring with the different tools to actually having the first the second or third version of my strat, which then started to become really profitable. And then it's about tweaking and adjusting and making sure it fits my lifestyle and the amount of setups. And it takes, a strategy can be very simple. You can have a trend line strategy and just trade trend lines, which is absolutely fine, but you still need a plan. So if you pull a trend line on the chart, then what, right? If price hits the trend line for the second time, what happens? If price hits it for the third time, what happens? And you collect that data. And once you collect more and more data, preferably per time frame in that case, you start to get a better idea of, oh, wait, on the 4-hour time frame, each time we hit a trend line for the second time, price is falling through the trend line. There's no support. Or it bounces, and it bounces for 4%. Okay, can I trade this? So, yeah, as an analyst, you're always improving and looking to tweak things to adjust to a potential new market environment. Same with bearish and bullish markets. Some strategies are much better in a bear market or a bull market or a ranging market. So you'll only discover if yours is better in market environments if you actually have a plan and track data. So yeah, simple strategies can work very effectively. I actually think the challenge is to make things as simple as possible. It's definitely not that more complex means more profit. My strategy arguably is very simple, and I guess the diamonds in here will be able to agree to this, that the rules I have and the strategy that I trade besides Elliott Waves is actually very simple. Once you get the hang of it, it's very simple. Doesn't use many tools. Yeah, it just takes a lot of time to get to that point. Adi, how are you doing? Good to have you here. I have a question if you don't mind. What are some things you've learned in the crypto space that you wish you knew before? Or my aha moment? By the way, 2 minutes before, or 1.5 minutes before we have some news again. That I knew before. Okay, step number 1. Or not step number 1. What I wish I knew before, or what I wished would happen to me earlier, is avoiding moon boy channels. Because, oh boy, it's just a bunch of random shit. So that would be one. Now, other than that, that I wish I knew. I wish I knew that trading is difficult. Because my first trade ever, the first one ever was, by the way, on Ethereum, was a big winner. Makes it look easy. But it creates false expectations. Trading is difficult. Something that I would have liked before, but I guess it's good that I didn't, is that creating a plan or a strategy takes a long time. Being profitable takes a long time. It's not get rich quick, right? It's like you're studying for a couple of years before you become a doctor or before you become a whatever your job. Same with trading. Before you become a trader, it will take years. At the same time, it's good sometimes that you don't know it will take a while because it take it step by step. I also so with regards to the 6 steps, that is what I have been through, right? The 6 steps. That's literally my career in 6 steps. I wish someone would have told me. To give me more guidance on what steps to take to reach profitability, because I can learn all the tools, and there's I think many groups and courses and people with memberships that will teach you how to use a speed fan and how to use a fib and how to use this and that. The problem is you need to make a plan out of it, and that's the difficult part. The easy part is learning the tools, right? You can do that by just experience. You don't even need a course. The difficult part is building a plan. I'm actually still looking for one answer. Oh, yes. Another one that I knew I wished before, you knew before, is that trading psychology is most important. Yes, you need a plan and you need technical experience or fundamental, depending on the trader that you are. But oh boy, do you need to work on your psychology? I wished I knew that the psychology is the last thing that I realized I needed to work on. It's the head. When you have all this, the technical know-how, you have the plan, you have the strat, you gotta work on psychology. You gotta work on your head, because you're gonna have problems with greed and FOMO and fear of missing out and discipline and confidence and You gotta work on trading psychology. It's very underrated, I think, as well, because we always talk about what happens on the chart and the technicals. But to trade and actively put money on the line, either your own money or prop firm money or a little bit of money or doesn't matter. It's still trading, and it still fucks with your head as well. So I wish I knew that one earlier. My aha moment with regards to trading was actually twofold. One aha moment was when, with regards to Elliott Waves, I learned about WXY because I labeled all my corrective structures ABC because I didn't get the WXYs. I just didn't understand. So I had a bit of a break, and then eventually I got back into it, learned about WXYs, took active time in my agenda to actually learn about it. And that's what, and I learned about WXYs. And when I learned about WXYs, because that was the last bit of info, that's when I was like, aha, I get it. And what really helped me in my career, this is the best answer I can give you. Something that I wish I would have done earlier is put all the FIB templates per wave in TradingView. I swear, if you want to use Elliott Waves in your trading, do this. Right, do this. It will help you so much. You don't have to remember all. I remember nowadays because of all the experience, but in the beginning, it will help you so much to get the templates for your fibs and know what is common and uncommon and what's for diagonal and all. It will really help you with your growth in using Elliott Waves on the chart. And in gold, I have a video where I go through each template and every scenario one by one. Another website that you can use is this one here. It's in the description. If you open the description, you scroll down. It's underneath Elliott Wave Education. EW Education is this one here that also talks about targets. I have a couple of tweaks myself, but it's a very good website. It takes a little bit of time. You sit there for like a few hours putting all the templates in place, but that will really help you with Elliott Waves. So, and that is when I learned the WXYs, which was the final thing I really had to get the hang of. And once I got the templates done, that's when I really was like, yo, I got this shit, I understand. Gotta have templates, yeah. It's so good. Probably there's a few more things that I will think of in a little bit. Cheers, Jeroen. That's nice. Oh, yeah, no problem. Wait. I could wait to a 6-year-old child. Yeah, that's the goal, but yeah, thanks, Jeroen. I'm happy to hear this, and I'm also, so by the way, Jeroen, he's in Diamond, and he's also, besides trading, also developing his own strategy, which is turning out to be pretty decent, pretty good, I believe. So and that's what I like to see. It's what I like to see in Diamond, is people also developing their strategies. Today I got a message from Bobby Ross, Austin as his name is, and he's a Diamond member as well, and he had a specific goal coming into Diamond, which was that he wanted, wait, let me actually put it on on my phone. I can have it on my phone instead of opening it on my laptop, so I can actually say what his goal was. 1 second here. And this is stuff that I really like to read. So if we go up, there we go. Austin, Mr. Bobby Ross in Discord. So coming in with a few years experience, my focus was primarily on making a consistent trading plan and tracking statistics, which is what I admired most about your teachings and your platform. I have always been inspired to become an expert on Elliott Waves, but first I need to nail down consistent journaling and statistics tracking, which I have now made great strides in. I mean, and then of course there's more, but that is exactly what I like. People developing their plan or strategy, they learn more about journaling, tracking statistics, developing a plan, and that will move them forward in the rest of their trading career. Instead of giving people fish, they learn how to fish. And I saw the email and that makes me smile. You know, that's what I do it for as well. And Jeroen also trying to develop his strategy and plan. And I mean, that's what I really like to see. I also love it when people leave Diamond and they say, yo, thanks to being here, I became more confident. I got a plan now. I'm tracking statistics. You know, like, yeah, I love that stuff. You know, that's exactly what happens there. Think about traders a week or two that about 12 p.m. had take 120k volume in a day. Of course, depends per person. That's a lot, but it may sound a lot in your case as well. Literally by accident, I was not happy with myself on that one. It's also the risk, right? It's 120k risk on a day as well. Let's imagine a world where Elliott Wave theory doesn't exist at all. What would you use instead to get the same level of success? That would be my other strategy that I have developed. Oh, jeez. But want to say hi? Yeah, thanks, Ash. Get yourself a wifey like my wifey that treats you with a nice salad during your, I guess, hobby work. It has cucumber, tomato, salmon, I guess guacamole, augurk, I don't know what that is, cabbages. Oh. God, it's good. Thanks, babe. So yeah, that would be my my other shred. And pretty much everything I use outside of Elliott Waves is what I would still use. So of course I show Elliott Waves dominantly in my content, but of course I show a lot of other stuff while TradingView is bugging once again. It's not the first time this live stream, so you can see it doesn't do anything, but the stream is still running. So I would use all the same tools, but I just use the other shred I have. Yeah. Is to combine all things and wait for that level. Exactly. Combine your tools, wait for the levels or wait for the tools to be in confluence with one another, and then, you know, pull the trigger. Yeah, that's the goal. I want it to be very simple as well. I know my strategy doesn't have a high frequency, but it's a personal strategy, right? It's not a strategy that I have developed for other people. It's a strategy that I have developed for myself, and if people want to, they can learn more about it. And by the way, let me say that the people that are trying to sell you, because probably some people have been approached, some people have entered Diamond, downloaded the content, and are trying to sell it to you. First of all, if you buy something like this, you're part of the problem. Secondly, it's already outdated because I update my strategy once in a while and I upload new things, and so you know, it's already outdated anyway. Yeah, that being said, I like to make it super simple, and it's low frequency, but it fits my life, my lifestyle, my trading, my, you know, and that's what's most important because it's my strength. But it might not work for people because some people are not patient enough, or they want to have more RR, they want to have more setups, they want to have less setups. You know, like, yeah, it very much depends on the person. What's up, oh Bill? Welcome, welcome. What I wish I learned earlier is that seasons come and go. Things that pump hard don't do well later. Oh yeah, yeah, and everything goes in phases, in waves as well, right? Never FOMO, YOLO, or catch knives. I guess that's one that I wanted to learn earlier as well. Is catching knives is no bueno in my case. Oh yeah, another thing. Sharing your P&L pictures or observing other people sharing P&L pictures is very shit for your trading. It doesn't do anything. No one is waiting for your P&L picture, right? Everyone is in the market for themselves to earn profit. So people sharing P&L pictures, the only thing they want is they want to have an ego boost to say, hey, good job, right? No one gets better by looking at a P&L picture, which is also the reason why with the trades channel, I very quickly stopped it as well, because I tried something new for literally a few hours and then we changed it. No one learns anything from it. So it's not beneficial. So I would not recommend looking at anyone's P&L pictures. It only makes things worse. Yes, trading is really difficult. Correct. 4 years experience in university takes time. Bernard, before start, I wish I knew the goal is to make your own strategy, not following what other people do. Lots of people can give you very good tools, but only you can make your own. Amen. I agree. I agree. You can learn a lot of things from people in the market, right? I'm sure other channels and other groups that can really bring value to your trading, or that will work better for you than me, because I'm focused on Elliott Waves and you may be looking for ICT or whatever. But in the end, you still need to try and develop a plan yourself. So I use Elliott Waves and Confluence with some other tools as well. But those tools are personal. What about channeling with Elliott Waves to find support and resist? I saw some examples which are very accurate. Do you recommend it? Well, you always use Elliott Waves with Fibonacci because it's pretty much part of Elliott Waves. The channels, for me, are more optional. So yes, you can channel corrective structures, which generally channel very well, right? With the highs and lows of a channel. You can channel impulses to find support for a wave 4. You want to see a wave 3 break out of the channel. Wave 5 target can be the top of or the bottom of the channel, depending on the market that you're checking on. But I'm not a fan of diagonal lines. I like horizontal stuff. So that is the reason why I generally don't really like to use channels. And I can use a horizontal channel, but in a WXY it can work, or in a flat structure, horizontal channeling can work. But I don't know. I then prefer using the fibs. So that's a personal choice. So a channel so fibs is pretty much something that is connected to Elliott Waves, like. Okay, wave 2 retraces to the 05 to the 786 most commonly, right? Wave 3 tends to go to the 1.618 or higher. Wave 4, 0.236 to the 0.5 retracement. That's well known that Elliott Waves has that connection with Fibonacci. The channels is more optional. But in a corrective structure, if you don't really like to count things in detail and you're more of a channeling person, the moment you expect a wave 4, right, you just take a channel. And by the way, I take it from the first red candle, right? It's a small detail, but that's where kind of the range begins, right? We retrace to this level a lot of times. So, to then the high. And then this is your horizontal channel, which I guess you can use as well. But I'm pretty sure that people will also have this. They'll have this channel, and they just trade the channel until it breaks, which I'm sure works for them. But I'm not a big channeling type of guy. So if you have a channel in a WXY, you want to have a channeling structure that goes against the trend before you continue. In a flat, you expect an A, B, C. So you expect the channel to be your base, and then a how do you call it? A diversion, or price moving above and then coming back in the channel, then moving below, coming back in the channel, and then continue. All right. With regards to a zigzag, you would need a diagonal channel where the low of wave C tends to move to the lower edge of the channel. So channels can be very useful, but that's more a personal choice. I'm just more of a horizontal type of trader. You know, I like my horizontal levels. When we are human, yes. I also don't think you can trade without emotion. I only think that you can reduce your emotional involvement by having a planned strategy backed by data, because it will help you with, okay, you know, I'm just taking this trade. It's according to the plan. All the rules are met. It's exactly what I'm looking for. This trade can be a loss. This trade can be a win. Doesn't matter, right? Doesn't matter if it's a win or a loss, because I know that based on 100 trades or 200 trades, this is my RR. This is my win rate. That's the data. So you're going to be less connected to the individual performance of a trade, and you're going to zoom out more and be like, well, price hits my stop loss. Fuck, it hits my stop loss. It's the way it is. You know, if I have a losing week, it's the way it is. If I have 5 losses in a row, it's the way it is. Right? It's just part of the plan. No one has a 100% win rate. And if your win rate is 50-50, right, 50%, and your RR is 1 to 3 with a winner, you're profitable. But yes, you can have 5 losses in a row. You're going to doubt yourself. You're going to be like, shit, is my strategy still working? Do I have to change something? No, you just got to follow the plan. You know? And then, of course, if long-term, over 100 trades or 200 trades, your strategy somehow is shit, then something's wrong. Either your data collecting is wrong, or, and this is what happens very often, this is what I also see in practice with people, also in Diamond, with people that write me DMs, is you collect data based on backtesting or forward testing, but the moment you have to trade it, you're not trading the exact like plan. You're because of your emotional involvement, you're going to doubt yourself. You're going to enter later than expected because you were doubting. You're going to close before your stop loss is hit because you're like, let me save those few bucks. And now every small little thing you do changes, the data goes out the window. Everything that you've worked on, collecting all that data for days, weeks, maybe months, goes out the window the moment you change something. The moment you enter later than expected, right? Data gone. The moment you close your trade sooner than your stop loss, just because you think, okay, you know, it's going to hit stop loss anyway, let me save a few dollars. your whole data collection is out the window. Yes, maybe you're correct. Maybe you're wrong. Doesn't matter. Let it hit your stop loss because that's your plan. That's what the data is based on. Because you're going to create bad habits if you have that emotional involvement with the trade, right? With the plan. Trading is also something to get. It takes a lot of effort. Yes. Trading keeps you busy, which can be a trap, of course, from a psychology point of view. I'm just trading because, you know, I'm bored. Boredom. I just want to be in a trade because it excites me, right? Oh, am I going to be in a loss or a profit? So it's good to do other stuff outside of trading, which I also guess most people actually want to do, right? They want to trade because of freedom. But then instead they create a plan or a strategy, or they don't have a plan or strategy. They're literally behind the PC all day to trade instead of enjoying that freedom. The stupid rat race. Yeah. Oh, it makes me think. Where is my favorite business author has 3 books. The Millionaire Fastlane, Unscripted, which I think is the best one, and The Great Rat Race Escape, MJ DeMarco. MJ, if you're seeing this. I love your books. So great book, Red Race Escape, and I think very valuable for entrepreneurs. And do not forget, if you want to become a trader, you're an entrepreneur as well. You're an entrepreneur. It's a business. You create your own business. Have you tried to apply ICT? I have watched, I think in 2022, I watched some of his content, and I had a Word document as well where I was making notes, because I'm a very curious person. So I do enjoy learning new things. So I had a whole document. I was making notes, and it was quite interesting. Even though the content is very difficult to get through, by the way, because it's so long, it's so drawn out. Like some of that info can be in like 5 to 10 minutes instead of 1.5 hours of video. It's interesting. I had a look at it, but it's not something I have implemented in my way of trading. Yeah. So some people will love it, other people hate it, other people just don't use it. I don't hate it, I don't love it. It's just another way of analyzing and trading the charts. 100% sure people can make it work, but it's not for everyone. And yeah, ICT it's not really something for me. I have my own set of tools, I suppose. Also makes me say, by the way, that it doesn't matter what you use. You can use anything and be profitable. Right. The Oracle. I know, right? Ashley, the Oracle. I know. Alexandra Boudreau. If I want to upgrade it, do I have to wait? No, you don't. 1 second. Let me send you a link in that case, because I have a link that I can give you. You can go to this website. Yeah, you can read more about it, Alexandra. Oh. If you check that one out, then you'll see what happens when you change your membership. Lucky you with a girl like that. It makes trading much nicer. I know, right? Yeah. I got my salad here. Not easy to eat, of course, when I'm live, but I take a bite now and then. But yeah, it's lovely, no? She's so sweet. I love my wife. I love my wife. I can hear her laughing as well. She says, yeah, I know. Liefde gaat, what's that quote? Liefde gaat door de maar. 1 second, let me have a look. Love goes through the tummy. Tatashara, we missed you yesterday. Correct. I was in a theme park. So what I did is I made a community post, and also in Discord I made sure to let you all know that I won't be able to live stream because I'm in a theme park. So I was in the Efteling, and I only came home very late. So I was so tired. It's not often that I am that tired. I was knackered. I just went pretty much straight to bed. We came home, already had food and stuff at the theme park, and we watched 1 episode of Dexter. I was on the couch like a bag of potatoes, and after watching the episode, shower, bed. It was poof, like, yeah. I was done. So that's the reason why. And also in Discord, whenever I don't really have the opportunity to make content or, I always let you know. What did I write here? Oh yeah, here as well. So I'll make sure to keep you informed. What's up, Jeremy? Good to have you here. But yeah, Tatashar, I suppose, thanks as well for missing the content. I can imagine that for some viewers here, it's part of a routine. So, Kun is awake in the morning. I can expect a video around like 9, 10, 8 a.m. somewhere in the morning, of course, and then live stream afternoon around 2, 3. But sometimes life happens, no? But Jeremy, good having you here. Just entered the chat. Check. Good to have you here, man. Hard for me is to not trade while still learning, then building a plan. You can trade with a low amount of money. That's what I then recommend is you don't have to stop trading when creating your plan. I mean, when you are collecting data, sometimes you want to just test it and put in a little bit of money. But don't go all in with your savings. Put $50 in, put in $100, risk 1%. You know, the legendary $1 risk trades, and start there. And you know, not like 100x leverage and then lose the whole $100, but just put in a bit of money, whatever is low for you, and just play around with it and take it serious when you're collecting data. If you collect data about, I don't know, Golden Pocket or the VWAP, just trade the Golden Pocket or the VWAP, and while you do it, collect some data as well. That's no problem, as long as building a plan is the focus. And then with a very low amount of money, you just test theories, I suppose. Going down question from Philippines. Welcome, Raquel Brimo. I mean, probabilities on the daily are higher for upside. 4 hour are higher to still move down below. Oh man, TradingView again bugging. I mean, this is the first live stream this happens, by the way. TradingView is not playing along. So probabilities on the 4 hour higher, we're still going to take this low. Probabilities, however, on the 15, this move to the downside looks corrective so far. Would be potential flat scenario. A, B, take the high, hit this blue box, and then move down in a wave C. But generally 4 hour time frame higher to take the low sooner or later. What's your plan looking on price action today? I mean, that's pretty much it, I suppose. Daily upside, 4 hours, still looking for this low to be taken sooner or later, but possibly first taking I to high, A, B, C, flat. Let me refresh again. TradingView is having some issues today. Bill Yamin, welcome. Bitcoin right now, just scamming. Big wicks, yeah. It's also a bit of volatility with the news. What leverage do you recommend? Depends on your risk. So NA, what I would recommend is, first of all, look at your portfolio size. What amount of money are you trading with? Then step number 2 is, how much are you willing to risk per trade? So if you have $1,000 in your account, are you willing to risk $10 per trade? That's 1%, right? Are you willing to risk 10% per trade? That's $100. And then if you know how much you are willing to risk per trade, because trading is risk management, everyone, right? It's not getting rich quick. It's all about managing your losses. So the moment you know how much you are willing to risk and lose per trade, that is when you can find the right leverage. Because your leverage should be based on your loss. Now, what do I mean? If I am a trader that is risking 1% per trade of my portfolio, right, and I find myself a setup with a 1% stop loss, I can go in with my portfolio like 100%. I can put in 100% of my portfolio and I risk 1%. What I can also do is I can use 2x leverage and put in 50%, which means 50% is still in my account that I can use for other trades because I use 2x leverage. But I'm only risking 1% still on this trade, right? I can also go to 5x leverage and only put in 20% of my portfolio to risk 1% of the trade, during the trade. And the other 80% of my portfolio is still in my portfolio. I can still put it at other places if there's other setups, right? Other scenarios. So you can see that leverage is based on how much you want to lose, first of all, and then how many setups do you usually take? Are you in one trade a time or two trades a time? Because you need to know how much money do I need to have in my account to trade different setups. That is what I base my leverage on. So the leverage that I generally use is either 5x or 10x, but I always risk 1%. So my risk is not changing, even though I use 5x or 10x. The only reason I use 5x or 10x is to have the opportunity to take more than one trade and still have enough money in the account to take those trades as well. But every trade will be a 1% loss. So that is how you should use leverage, in my opinion. Use leverage to manage your losses. Oh my God, TradingView. I can't even scroll anymore on TradingView. It's bugging already. Holy moly. First time this happens, by the way, and someone joining here and be like, yo, what's this TradingView doing? Oops, that, I don't know, random alarms. But I honestly have no idea why TradingView is acting the way it does. Let's just not move it around too much. Paul is speaking right now. Damn. What happened? Took him like 30 minutes to walk to the stage? Holy moly. He should have been on stage at 4 p.m., no? You old? No. Crawling to the stage would have been quicker. What's up, Christoph? How are you doing? Welcome. Welcome, welcome. Cheers, Lil Wills. Cheers, cheers. Good to have you here again. S&P hit a higher high on the day with Powell's speech. Dollar is flat. Well, let's see what it does. At least we have some movement now again on Bitcoin here. 4-star strength. Daily upside. 4 hours still looking for this low to be taken sooner or later. On the 15, this at the moment looks like a corrective structure down. So we might look for a wave, a flat in a Y. A, B, hit resistance. C to the downside to hit support. But yeah. 4 hour and daily probabilities are a bit more clear. This move to the downside so far has been very messy. But with all the overlap, looks more corrective. Yeah. Is 10x not too sensitive? Your entry has to be on point. No. That depends on your stop loss. So for me, 10x is perfectly fine because my stop loss is not going to be 10% or 9% or 8%. You know, my stop loss is usually below 2%, 3%. I mean, Elliott Waves, my stop loss can be longer, like 4% sometimes even for a swing or 5%. But that's still no problem. I have enough margin before liquidation. My liquidation, by the way, is never my stop loss, right? I have a stop loss. That's my stop loss. So I have enough room. And with 10x, again, I use 5x or 10x not to increase the leverage of my position because I'm still risking 1% of my portfolio. So I can enter a trade with 1x leverage if my stop loss is 1% or higher away from my entry, right? Shit, I lost my train of thoughts. So I can, whenever the stop loss on TradingView, I don't want to mess around with TradingView too much because it's been bugging already for the day. So if I put the position thing on the chart and I put my stop loss at 1% or 2% or 3% away from where price is, I can enter the trade with my full portfolio size, right? And I can risk 1%. If my stop loss is 2% away from my entry, I enter with 50% of my portfolio size and I risk 1%. Yes. But what I do is I use leverage to still risk 1%. So my risk is not changing. It's not that I use leverage to risk 5% per trade or 2% or 3% per trade. I'm still risking 1% per trade. However, using leverage gives me the opportunity to take more than one position if another setup presents itself. Because I still have money in the account, right? So that is how I use leverage. So my risk is the same. I will always use 1% risk per setup. So that doesn't change, right? It's just that I can trade 1% risk by putting the whole portfolio in and not have any money left in my account because all is in there and I use no leverage 1x. But I want to have that extra in my account because if another setup is there, I want to trade it. So yeah, it's about risk. It's about the position size. Your leverage should be calculated based on your risk. How much risk are you willing to take per trade? Once you know your risk, then you can go to leverage and be like, okay, how far is my stop loss? How much leverage do I need to risk the amount of money I'm comfortable with? Once you put the position calculator on the chart, never look at the profit. Don't look at your profit like you're in BingX, Bybit, whatever platform you like to use. In my case, BingX. Don't look at the profit that you're going to make if price hits that number, right? And then be like, oh, I want to make more money. So let me up the position size, and then you see the numbers going up. And what you're not looking at is that red number. How much are you going to lose? Look at that number. Don't look at your profit. It's not important. Look at the loss, right? The profits will come if you have a clear plan, but you got to risk manage. Got to pay attention to your losses more than your wins. How much are you willing to lose per trade? That is the question you got to ask yourself. And then the profit will come. If you have a solid plan, just follow the plan. You're going to make money. Yeah, let's see what happens. Of course, news, bit of volatility, right? Price moving to the upside, hitting this gap. Not on my chart because of the wicks here on Coinbase, but cheers, Christoph. Yeah, it's a lot of. I love talking trading psychology. Trading is a lot about psychology, of course. 4-star strength. Do you take into effect social and economic? How do you take it into? Like wars, candles. That would be, in my case, 4-star strength. That would be 0%. But this is trader dependent. Some traders will be fundamental and technical. Other traders will be 100% technical, or 100% fundamental. And it doesn't matter what you use. You can, of course, be profitable using anything. But I am very much a pure technical analyst. Yeah. I don't like to follow news and stuff. I've never actually, in my whole youth and everything, I've never liked following the news or reading news. I learn about what happens in the world. Of course, I know what happens in the world, but I get it through different sources. But I don't like to use it in my analysis. While other people might prefer using fundamentals over technicals, which is absolutely fine. And I can recommend the books Market Wizards, right? Links in the description as well for those books. Market Wizards is amazing, and you will see that those are like the top traders in the world, right? Like at least the ones that have opened up to their story. Some are technical, some are fundamental, some are a combination of both, and it doesn't matter what you use, as long as you are good in your type of analysis with your tools. And it's very, very inspirational in a way. So yeah, I don't follow anything with regards to news. And yeah, you should take break and eat that great meal. Yeah. I have to stop the stream as well. It's been a while already. 2 hours, 12 minutes. Good heart, good analysis. Cheers, Kaiwit. Cheers. My tummy is hungry as well. Yeah. Suhail, always a pleasure. I get it now. Good to hear. Risk management, man. It's all about risk management. Ren Buffin, did you ever try high frequency trading or low quant trading? Probably not in the way like I don't really know what high frequency trading is unless you talk about scalping. I never really did research on these two things. So probably the answer is no, because I don't really know what it means. But if high frequency trading is scalping, then yeah, I tried it, but never really got into scalping because there's too much going on. And it for me, I like to do other stuff outside trading, and scalping kind of like forces me sometimes to sit behind the PC longer than I want to, or focus on the chart more than I want to, because I want to reply to emails. And at least nowadays, in the past I didn't have a YouTube channel, of course, but even then, back then, I had two businesses. I'm a global keynote speaker, and I had another business which I stopped that startup because I like YouTube more. So yeah, I want to dedicate my time to other things I like to do, and I want to do sports outside and have a walk and go to the Efteling with my wife, and yeah. So I'm happy with my plan of low frequency, I suppose. A couple of trades a month. However, with Elliott Waves, I trade a lot more. Like Elliott Waves, I can sometimes take a trade a day. I haven't taken a new trade today, though. Today has been tradeless for me. Wait, I took one trade, but it wasn't Elliott Waves related. Gotta say that. And it was a break-even trade, by the way. So that was with regards to the other strategy that I have, but not Elliott Waves. The most recent Elliott Wave trades, TradingView messing up, was long at 56, short at 65. Then we had, what was it, Diamond? Long here, that was yesterday, went long at about 61.3-ish here, because price took this high, probability is high to move up. And then a short at the resistance I had here, stop loss at the 0.7 for a potential double zigzag WXY, and now price moved down, and it's just management. So, and now again, TradingView bugged. I don't know what's up with TradingView, but it's been not the greatest experience today. Wick Tuesdays, I know, right? Pump it or dump it. Powell is lagging my TradingView. So if we take the highs first, we go for 64K. I mean, we have resistance here just above, but the lower this move down goes, without actually taking the low over here, the higher your common target for wave B is going to be. So yeah, in a potential flat A, B, and then a C. Cheers, Rob. Thanks for hanging out. Appreciate you being here. Legendario, always a pleasure. Not only TradingView. Is something else bugging as well, or? So far, everything runs well except for my TradingView. It's been a pain in the ass today. I don't know why. It's the first time since this channel is live that my TradingView is not working. Also, first time for me ever that my TradingView is like this. So, but yeah, I guess it's also a good moment to just end it, enjoy my my lunch at the same time. So, everyone, thanks for being here. What I am gonna do now, by the way, is continue on unpacking my. 1 second. Yeah. Continuing to pack the giveaways that I did for 10K, the t-shirt, hoodie. Caps are still coming. They're not there yet. Gotta put in the work. All the handwritten letters that I have as well. So gotta continue. And then the caps will arrive somewhere this week. So I think between 15 and 17. So it should be the end of the week, no? I mean, 15, 17, that is... Oh, maybe they arrive tomorrow. They should arrive this week. So between Wednesday and Friday, the caps should arrive. Caps with the embroidered Koens logo at the front. So it should be quite interesting. Oh, wait. Final question, by the way. Lil Wills. Cheers, by the way, Suhail. Lil Wills, what's your advice to start learning Elliott Wave? Should we start from reading the theory first, or what's your experience? Here's the advice. Step number 1, if you open the description, you scroll down, there's Elliott Wave Education, right? There's a laptop emote and a link called bit.ly/Elliott Wave Detailed. That is a link to a public page, absolutely free, public, and it is an amazing website. And I recommend starting there. Step 2 is a nice to have, not a must have, is the Elliott Wave Principle book by Frost and Prechter. Get the newest one. And the third option is to join the gold membership, where all my experience and all my Elliott Wave knowledge is in there. So yeah, but hey, I mean, you can start for free, of course. If you want more guidance, then of course gold is the place to be. So Ethereum would be the altcoin stream, first Sunday of the month, maybe more times during a month though, because I do tend to get questions. But thanks everyone for being here. Appreciate you hanging out with me during the news hours that we have. Thanks for the 100 likes. Cheers, Mark, for all your efforts as well. Your hoodie is being packed. Maybe yours is already in. It may have been packed already. I gotta get to work. Okay, cheers everyone. Thanks for hanging out. Trade safe, right? Trade safe, and I will catch you soon again.